So I'm here today with Rich Berry with Pride Rock Mortgage, and we were going to talk more about the different types of loans that are available for construction lending. Rich, when we talked last time, you went through a few different types. Do you want to go over those and then just maybe a light skim across what each of them
Sure.
requires?
There's all kinds of construction loans. For example, if you did it would follow the Fannie Mae guidelines, let's say, and it would be, I guess you could call it a conventional construction loan. It would be 10% down, or I have a loan that does 5% down. They'll follow the Fannie guidelines, the county lending limits and all that stuff, the debt to income ratios and all that. You can do a VA construction loan. You can do 100% financing on a VA loan. Therefore, you can do 100% financing on a VA construction loan. So if you, let's say, put down, $5,000 or something on the purchase, well, that gets held in escrow, the loan closes, you're doing 100% financing, that $5,000 goes towards, say, closing costs and escrow and stuff like that. So again, you're financing 100% of the loan. VA is also very forgiving on debt to income ratio because they calculate it differently. They call it residual income. And where on a conventional loan, you can go to, say, 48% of debt to income. So in other words, $4.80 out of every 10 you make can go towards debt. On VA, it's much higher because they calculate a little bit differently. So I've seen them as high as 60, 62, 65%. So It can go much, much higher. You don't have PMI on a VA loan. You have like an upfront MIP, like kind of like an FHA. You have an upfront, and that can be waived depending on whether you're 10% disabled or more.
You used a quick acronym, you kind of slid it in there,
sorry.
the MIP. So MIP is what?
Mortgage insurance premium. It's like, it's if you're going to do, say, a VA or FHA, they charge you up front and they finance it into the loan. So
yeah. So I mean, everybody does it. There's just different little acronyms for each one. And then what about if somebody wants to do conventional? And what would be the benefit to someone doing conventional over maybe FHA or VA, or which might have more benefits?
Well, if you're doing VA with money down, then you might consider, like if you're putting 20% down on a VA loan, then you might consider conventional because you won't have the upfront mortgage insurance, that mortgage insurance piece up front. You won't have that, and you'll probably get a comparable rate. And if you're putting 20% down on conventional, you don't have PMI. So it's very comparable except for you don't have that upfront cost.
And that's the threshold, 20% is no mortgage insurance.
On the conventional, yes.
Yep. Okay. And so with any of those, when you sit down and you talk to Rich about your own personal finances and banking, that's where you're going to help them figure out which one is the best for them,
yes,
right?
Correct.
Based on the debt to income ratio, how much cash they have, how much their threshold is for their monthly mortgage payment. So while we wrap up this one, if somebody wanted to know more about new construction, how would be the best way for them to contact you?
My cell phone's always best. I have it with me all the time, 603-498-8736. And my website's www.priderockmortgage.com.
So if you want to learn more, certainly give Rich a call. You can always visit us if you want to know more about the construction that's out there, what options are available. We love construction and would be happy to talk to you more. You can visit us at paulamartingroup.com. Thanks for watching.
Thank you.